Assalamualaikum and good morning everyone. In this video, I will tell to you what is SST and GST and which of this one is better for our country. Before we start, I would like to introduce my group member. First, Muhammad Nur Arif, Muhammad Fitri, and my one Danish Faik, and myself is Shamil Iskandar. GST registration started in October 2014 and the tax was officially implemented on 1st April 2015 in Malaysia. GST is a type of consumption tax imposed on goods and services at different stages of the supply chain. It is also known as VAT, value added tax in some countries. About the tax collection, GST is levied from the supplier to the retail stage without becoming part of the product cost. Businesses can claim the GST paid on their input, making it a tax on the value added at each stage production or distribution. About the deduction of input tax, the number of stages in the supply chain does not affect the deduction of input tax by businesses in subsequent stage. This allows businesses to offset the GST paid on their purchase against GST collected on their sale. GST is a comprehensive tax that's applied to all sectors and goods and services produced in Malaysia, with specific exclusions determined by the Minister of Finance. Streamline administrative procedure. Why? Because the self-policing nature of GST enables business to automatically deduct their input tax credit. This streamlines administrative procedure for both businesses and the government, making the tax system more efficient. The implementation of GST also aims to improve the government service delivery system by enhancing tax compliance and simplifying tax administration. That's all for GST. Now we go to the SST, which are sales service tax. About the SST was introduced in 2018 as a replacement for the goods and service tax GST in Malaysia. SST consists of a sales tax and service tax. The sales tax is imposed on locally manufactured or imported goods, while the service tax is imposed on taxable service provided by registered businesses. The sales tax is levied on the purchase price of certain goods and service. It is imposed at the point of sales or disposal and applies to those domestically manufactured products or imported goods. The sales tax rate varies based on the type of goods, typically ranging from 5% to 10%. Businesses need to assess whether their total sales value of taxable goods has exceeded 500,000 in the past 12 months to determine if they are liable to pay sales tax. The service tax. Service tax is a consumption tax applied to taxable service provided within Malaysia by registered businesses. The standard service tax rate is 6%. Businesses need to assess if the total value their taxable service provided within 12 months exceed the prescribed threshold, typically 500,000, to determine their ability for service tax. However, certain services may have different thresholds, such as 1.5 million for operate of restaurant and cafe. Due to evolving nature of tax regulation in Malaysia, businesses may find it challenging to maintain compliance with the SST. Now, I will pass next part to Danish Faik.
Thank you, Iskandar, for giving me the opportunity to continue the presentation about taxation in Malaysia. So, what is the difference between SST and GST? For SST has a narrow tax base which typically applies to a particular range of product and service that the government has determined. It could comprise subcategories like production, importation, and a particular service. Plus, SST often has a smaller geographic reach. But compared to GST, GST has a broad tax base and applied to various goods and services throughout the supply chain. It is a value-add tax that covers the added value at each stage of production and distribution until it reaches the end consumer. In NST, some manufacturer, distributor, retailer and importer use transfer pricing to avoid disclosing their tax man, while GST able to reduce concern of theft, misappropriation and tax payment. Finally, rate for LST can range from 5% to 10% or certain rate additional 6% service tax. But GST system has a 6% standard rate and is not an additional tax, and there will be no additional tax in GST. So that is the difference between SST and GST. So that's all for me. Thank you, and I will give the presentation to the next person.
The decision by the Malaysian government not to reintroduce the Good and Service Tax (GST) at present carries both benefit and drawbacks. On the positive side, the government focused on economic recovery and elevating the financial burden on low-income growth is commendable. By deferring the reintroduction of GST, the government aimed to support the recovery phase and address the challenges faced by individuals grappling with the rising cost of living. The evidence of food inflation at a rate of 5.8% in 2022 further underscores the importance of providing relief to the most vulnerable segment of society. Additionally, the government commitment to implementing more progressive tax measures as outlined in the 2023 budget is a step in the right direction. By increasing income tax for higher earners and proposing taxes on capital gains and luxury goods, the government aims to broaden the tax base and ensure a fairer distribution of the tax burden. This approach demonstrates a commitment to social equity and a willingness to explore alternative avenues for revenue generation. However, a potential drawback of not reintroducing GST is the impact on government revenue. GST traditionally serves as a significant source of revenue, and its absence could create challenges in funding various public expenditure programs. The government will need to carefully consider alternative revenue sources or potentially increase the burden on other taxes to sustain public finance effectively. While the article does not explicitly mention alternative revenue measures, expert analysis highlight the importance of exploring options to enhance tax collection given the broad tax base that GST offers. In conclusion, the decision not to reintroduce GST in Malaysia currently offers benefit in terms of prioritizing economic recovery and providing relief to low-income groups. However, the challenge lies in ensuring adequate revenue generation to sustain government finance. The expert analysis support the view that deferring GST is a reasonable step to alleviate the burden on low-income households, but alternative revenue sources must be explored to ensure long-term fiscal sustainability.
The decision to implement Goods and Services Tax (GST) instead of Sales and Services Tax (SST) in Malaysia offers several notable benefits. GST has a wider range of taxable goods and services, ensuring a fairer distribution of the tax burden and increasing government revenue. It includes input tax credit, reducing tax cascading, and enhancing operational efficiency for businesses. GST simplifies the tax structure, streamlines administrative processes, and lowers associated costs. It promotes transparency through comprehensive record keeping and documentation, reducing tax evasion and fraud. GST aligns with international standards, facilitating cross-border trade and enhancing Malaysia's competitiveness. However, the choice between GST and SST should consider Malaysia's specific circumstances, economic impact, sector-specific consideration, and the welfare of business and consumers.
Although evaluation is necessary to make an informed decision, the best serve the country's long-term interests.
I think that's all from us. Thank you for watching our presentation video.